Welcome everyone to the third in our series of investment alignment webinars. It should be a good one. I'm very pleased to I've got my paper and I'm going to read out some housekeeping things, but it's making me feel very newsreadery. So watch out for that throughout the course of this. Something happened today in football. Right. Please note that the participants' video and audio have been disabled to minimize interruptions, in case anyone was thinking of talking a lot about football. If you'd like to pose a question or comment to any of our presenters, please use the Q&A function, and we will either write a reply or respond during the Q&A session at the end of the webinar. Alternatively, you can contact the speakers directly following the event. Please note that the webinar will be recorded. Great, so my name is Katherine Doggrell. I am one of the co-founders of NewDog PR, and I will now encourage everyone to introduce themselves, or I'll forget and it will be awful. Felicity, take it away.
Well, I'm a corporate lawyer whose clients predominantly invest in operating real estate assets with a particular hotel focus. So we're doing M&A, financing, underlying contracts, the HMAs, franchises across a number of jurisdictions. And our latest offices are Vietnam and Australia. And we're delighted to welcome everyone today. And I'm sure with this audience it will be, and panel, it should be interesting and entertaining. So thank you all in advance.
Marvellous. Carine.
Good morning. My name is Carine Bonnejean. I'm the Managing Director of Hotels for Christie & Co. I look after the UK hotels, despite being French. So looking at it across brokerage, valuation and consultancy. But I also work a lot across Europe with our network of 25 offices, looking at everything to do with hotels, basically, on a day-to-day basis. That's me.
Wonderful. Thank you very much. Tom.
Hi, I'm Tom Magnuson. I'm CEO and co-founder of Magnuson Hotels. We're a top-ranked global hotel chain with 65,000 hotels and 700 airlines on our worldwide booking platform. We're a technology-led company with our own brands. We focus mainly in the mid-scale sector. In 2019, we outperformed the UK and the US RevPAR index by 10x. In 2020, while most of the UK was closed and the US was open, we outperformed the STR RevPAR index by 3x. We've been here in the UK now for 11 years, 2010. We relocated our corporate HQ to the UK, to London 3 years ago, and we've just recently launched our new technology platform here in the UK. So we're hoping that we can bring some of our experience in the mid-scale sector with our technology and our branding to bear for some of the UK owners. Thank you.
Thank you. And you. No.
I think I've unmuted myself now. Is that right? You can hear me now?
I can hear you. Yes, perfect.
Very good. Hi, I'm Hugh Taylor. I'm the Chief Executive and co-founder of Michels and Taylor. M&T is a leading management, advisory and asset management hotel business across Europe. We have about 23 hotels we run under full management contracts in the UK and our management division. We do about 40 to 50 advisory and strategic projects a year on our advisory side. And we have about 25 hotels under asset management where we oversee hotel managers on the ground. My partner is Sir David Michels, ex-head of Hilton. I ran a division of Hilton. All our team are brand experts and specialists in their various fields. And we're delighted to be represented today. Thank you very much for inviting us.
It's a delight to have you. So, necessity is the mother of invention, and the sector is dealing with a lack of guests, a lack of staff, and a lack of cash. What has it learned, and will it stick to all of this once it's over, or will it go back to its old ways? To kick us off, I'm going to ask Carine for her view on how attractive the sector is looking to investors.
Thank you, Catherine. Actually, it's massively attractive, and there is an enormous amount of capital chasing opportunities, would that be on equity or the debt side. So we've probably never seen as much interest from all parts for our sector. So they really see a path to recovery for the hotel sector, and anything that comes to market really attracts an enormous amount of interest, probably a lot more than versus other sectors like retail and offices, which are a bit more doubtful in the current environment. So a lot of money waiting for opportunities, but what we're missing very much is opportunities. But we have a bit of a two-tier market generally. So a regional UK market that is massively attractive, and there is a lot of activities. Just to give you an idea, since the 1st of January of this year, we've already exchanged on 134 hospitality businesses, which is an enormous amount, and sure there is a lot of activity, and that's over double from what we did last year for the same period. So there is activity. If you bring something to market, you get a lot of interest for it, but there's small volumes. What we are missing right now is the bigger opportunity. We've seen quite a bit more since January, February. We had about 1 billion worth of large deal on the market in the UK, but most of those deals have found a new home pretty much. So I think where we are is a bit of a limbo situation where we don't have enough big opportunities. Some are being prepped, but with hotels coming to reopen in only a few weeks' time, I guess we might see a bit more wait and see situation where we see our hotels are actually trading, and then see more opportunities coming, and the famous distress might happen a bit later in the year once everything, all the government support has gone. But massively interesting. Everybody has raised billions. They just don't have enough to look at.
Okay.
Across Europe.
What are people selling? Because we heard quite a lot about 6 months ago, where you had big hotel companies saying, we need cash, we're going to get rid of just one little thing here and there. Is it this sort of piecemeal selling, or is it more, just slice off all London hotels, or slice off whatever else that we can?
I mean, outside of obviously regional market, which is mostly linked to lifestyle changes, where people just want to move on to another sector. On the bigger opportunity, you had a number of distressed happening that we've seen, but a lot of what we're seeing right now is non-core disposal, where people are doing a bit of strategic decision, need to release some cash, thinking, can we just remove some of the non-core asset from the portfolio? So we've done a number of those, for instance, for Whitbread, and we have other portfolio where we're doing a similar exercise.
Yeah. And are these experienced investors coming into the market, or is it a case of, office and retail is awful, quick into hotels, all anticipating this kind of sudden spike?
I mean, a lot of the names we are coming across are experienced hotel owners previously or in existence already. So you have a number of new players, but I would say a lot of it are the usual suspects still circling the sector.
Yeah. And Hugh, are you seeing a lot of interest from people coming into the sector, or is it people approaching you who've already been here, or are you seeing any shifts and changes in the market?
I think this is a deliberate strategy.
We're going to do this.
Yeah.
Just 4 words.
Yeah. So I agree entirely with Carine. I'm seeing the same thing. It's an extraordinary situation. We should be in the depths of a recession with a load of distressed assets out there, with hundreds of people doing great deals and working on the bottom of the cycle and building up again. I'm involved in 7 processes as of today. We were the underbidder on the Horizon portfolio, which went to Marathon 2 weeks ago. We were very disappointed not to get it, but clearly there was enormous interest around that. We were the last one standing. It seems to me that the investors have huge amounts of money, are waiting for the distress, and it's not coming for a number of reasons. Firstly, whilst we're in a deep recession, and we have been in a deep recession, we have no recessionary environment around us. The banks aren't moving in. The administrators aren't getting involved. The assets themselves are owned by people who are being supported by government. And the stagnation in the industry, which is what we've seen in the last 18 months, has effectively meant that nothing's happening. when they are going into market, and it's good to hear that there are, starting to see some movement in the assets, they're all coming in at 2019 numbers. And you're looking at yields on the back of these previous peak numbers and maybe discounting by between 10 and 15%. Against the book values, however, they're not that far away of the existing assets prior to COVID. So there's no adjustment. The pricing against what the people out there are looking to buy and the people who are selling and believe that they need to do is not happening. It's not aligned. Consequently, the sellers are saying, well, look, if I can't get the price, I'll just sit on it because I haven't got the pressure that I would normally have from my stakeholders at this time in the environment. What I can tell you as a hotelier in 30 years in the industry who has had 4 recessions now, we are going in a recession. There is going to be a lower performance next year, this year, next year, the year after than we had previously. There is going to be at least 2 to 3 years of recovery. And in markets like London and Paris and Rome and the big hotel markets, you're not going to see business coming back for some time hence, maybe 2024, 2025. And that's because of the international travel. It's because of the meeting sector in particular, which is really not happening in the way that it should, and the lead times are very long. And so the pricing, in my view, is going to start to change. You're going to see a lot of refinancing in the next few months as well, which we can certainly talk about. And you're going to see people realizing that their business plans pre-COVID simply weren't real against the new environment that we're in, and things are going to have to be done. They haven't as yet because they're still in this bubble of protection from government and other opportunities.
It is very bizarre. It used to be the case that you only needed to change Easter a little bit and the whole industry would just collapse in on itself. But
yes, exactly.
So it seems fine that you can shut down for a year, apparently, if only we'd known. But you can see everyone taking sabbaticals. Do you think that, how much longer do you think this bubble can stretch out? And in the UK, the government is keen to, yank the trap door open. But is that true everywhere?
I wish I was clever enough. Wish I was able to tell you what the situation.
You can tell us. It's fine.
Should I tell you? Yeah. Okay. I'll give you a date. I actually don't know. And honestly, it's incredibly difficult to read. I'm writing models with my team continually on assets. We're taking views for the next 5 years. I cannot tell you what's going to happen with my own hotels next week. I just don't know. I can tell you next week because they're closed, but next month perhaps, or the month after. This, if you go into the market, everyone will be talking to you about the enormous demands of the staycation market, the leisure market in particular. That is true. If you own a hotel in Cornwall in this summer, you're going to make a fortune. Having lost a lot of money over the last year, you're going to make a fortune. But remember that the vast majority of hotels in this country and across Europe are actually business hotels, meetings hotels, and there is no transparency or understanding as to what's going to happen in those markets and how quickly they're going to come back. When they come back, what rate are they going to charge? What rate will they pay? To what degree will the companies reduce the travel policies to allow people to actually travel in the first place? All these things are unknown. At the same time, you've had a year of people saving money. So there's this expenditure that's going to happen on the leisure side as well. So the dynamics are entirely unique. In 30 years, I've never seen it. And anybody, and I've said this on a number of webinars of the last year, anybody who tells you what's going to happen are almost entirely going to be wrong. I just don't think anybody knows. You can take views and assumptions, but honestly, we're in new territory and nobody knows.
So bearing in mind that nobody knows, how are you able to do your job in your hotels? What do you do with all your business space? What do you do with all any space that isn't a bedroom you can just lock somebody safely up in?
The answer to that, it's a very good question. When we launched, when the businesses closed down, we had to put into place operational requirements for COVID practice, as you know. And all the hotel companies did that, and all the brands came out with big named programs. They were really impressive, and it demonstrated to me how responsible, how creative, how innovative the hotel industry actually is when it needs to be. The things that were put in place within a very short period of time to look after this environment was very good. And I think that moving forward, you adjust in the same way. As the hotels reopen, you have to be very careful about your cost base. You've got to make sure that the payroll is appropriate to the revenue that you're bringing in. You've got to make sure that you are controlling and understanding your distribution so that when people come in, and Tom, I'm sure we'll talk about this with his business, which is a huge distributor of business. When you're looking at business coming in, you need to know who they are. You need to take a view very quickly and keeping an understanding of the market as to when they're going to come and what they're going to pay. And then you need to assume your numbers on a short to medium term basis with micro management principles in place to make sure that without looking too far ahead, you can adjust and react and be as flexible as you possibly can to an unknown environment. In my judgment, the best management teams in the world are going to be the ones that can adjust, be flexible, and see short-term opportunities and be as creative and innovative as possible in looking after the customers that arrive without knowing who they are yet, to what degree, and what they're going to pay.
Thank you. Tom, you have been suitably teed up. Are you Hotel's flexible friend?
Ask that again.
Are you the hotel sector's flexible friend?
I think there's so many places to start here, and we're talking about here, and I use a word that you used back a few minutes ago, Hugh, about extraordinary situation. I mean, I hate to trot this out because I sound so old, but I started working in properties when I was 8 years old from my grandfather and my father. So I've been through so many things, and I think the things that we all remember the past are 9/11 and 2008. And after those, it was somewhat back to business. Pick up the pieces and get back to business. But this one, as we've talked about, is going to be so different. And what concerns me, or intrigues me, is the question you asked earlier about, the investment. There's so much dysfunction going on structurally right now, or so much change structurally, that presents opportunities for chains to take a power grab, for investors to pick up undervalued assets. But then on the same time, if owners can enact some of these changes, like Hugh, you've talked about people being multi-skilled, we need to reduce the head count that we used to have because we don't have a predictable revenue flow, and outsource. The independent owners could come out of this very, very well, if they can move nimbly, capitalize upon a lot of the upcoming domestic tourism that's probably going to be here to stay for quite a while. So are the owners going to be flexible? Owners ask, every owner I talk to now is how soon am I going to get my EBITDA back? But if they're looking at 2019, it's not going to be realistic. Because so many of the business segments have moved. Everyone's going to need to completely rebuild their business segmentation.
So what do you do with your lack of business travel?
Actually, we don't have a lack of business travel. And that's been one of the things that's saved our hotels over 2020. We made an intentional shift when we launched our new technology platform in 2018 for every hotel in every market to try to put together a core foundation of local and regional non-leisure segments, government, medical, public safety, transportation, because as we focus in the mid-scale sector, a lot of these can even be construction. And what happened in 2020 was that our hotels, they did okay because all of these sectors were deemed essential services workers. and they were they needed to travel. So it's kind of an ethos that we take toward every hotel, is that no matter where the market is, the first thing we try to do is try to build up a foundation of 52-week non-leisure that helps the hotel just get to break-even basis. And then when the different peaks and valleys come of leisure or special events, those are our yield points. So that's how we approach that.
That's yes, an unusual approach, given the way that everyone else's business travel looks at the moment. Felicity, brands making a power grab. That sounds like something that you need to comment on. Have you have you seen this happening? We also have a similar question from the floor. Is this an opportunity for brands to come in and move in? We've seen an increase in conversions after a slow start over the last year, but there has been a lot of converting into collection brands and things on those lines, as people have realised that distribution is where it's at, and maybe they don't need an extensive pillow menu after all. Are you seeing any move towards the brands?
Yes, partly because the funders like the brands. I think if you were looking for, I think it's still relevant. And they do deliver. I'm not seeing as much flexibility in new terms as I would like to have seen. I think some brands are more open to it than others, those who are making harder pushes, but some of the very traditional brands, I think, are more like rather large ocean liners that can't turn terribly quickly. But they're not yet stuck off the coast of Italy. They are, there's no doubt that there is something they provide. I would sort of be beating the same drum that I would very much like to see. And I think actually the new class of owner, the new type of owner, after the experience in the real estate markets generally, may be taking a tougher view on wanting to control their own finances slightly more than just handing over to a brand and writing a check. So the role of the asset manager will become even more vital. And to a certain extent, with all due respect to Hugh, you shouldn't need an asset manager in the way that most owners do need an asset manager. I think if there was a slightly more open, transparent approach from the brands, perhaps you wouldn't need the asset manager quite as much as you do, but undoubtedly now you do. And don't get me wrong, the brands have still got a lot to deliver. And at the end of one of the other webinars, I still voted to have a brand because I wanted to make sure I had the finance things. So, but I would like to see more innovation, more flexibility, more. Some of them have been incredibly good during the pandemic, but I don't know there's the visibility as to where it'll go as they come out, and whether they've now got the staffing to do the individual capex where something has been put off, as you can imagine, for a certain amount of time, where that's going to go, whether or not that the big marketing contribution can be spent on driving local business, or whether they're going to say you're on your own for your local business. So I do think there are a lot of questions, and whether the loyalty programs are still delivering and whether those are fully understood by the owners. So yes, it's a very important market for them, but I'd like to see more of a collaboration. So,
do you think if we're in a phony war at the moment, we haven't seen all this distress, and we haven't seen, the different government support being taken away, do you think that then when things get really hairy in 1 to 6 years' time, that's when we'll see the opportunity to maybe see some more flexibility from the brands? Or do we have to wait for a whole new recession?
I don't think we have to wait for a whole new recession. I think it is a gradual process. And I think it's just wishful thinking that it will speed up the process. I do think there are accommodations that need to be made, and they probably should be put through the brand standards. And I don't think those are going to change anytime soon. Okay. So as a good asset manager and a large enough portfolio, you can push the boundaries more than you can for smaller owners in terms of the number of hotels in their portfolio.
Hugh, when Felicity said flexible, I saw that you turned your mute off. So I couldn't help taking that as a sign. Here in, virtual conference land, I can't catch your eye or anything, but people turning their mute off is a key sign, I think. Are you seeing flexibility from the brands? And also, if you'd like to comment on Felicity's, do we need asset managers? I think on previous, in this series, we've talked about how really when it comes down to it with hotels, no one actually wants to get into the nitty gritty of managing a hotel. So asset managers can fill a very important role if people wanted to be hands off. But obviously it's not just that.
I wasn't suggesting they shouldn't be needed. I think they're very much needed.
deeply.
Just to be clear.
No, listen, nothing personal. Let's just take this asset management thing to start with. I think that this all came about, as you recall, 25 years ago when the brands started to divest of all their assets. David Michels, my partner, was one of the pioneers of that and did 4 deals when he was running Hilton and sold a few £billion of assets and then sold the whole company to the Americans. The franchise model has completely changed our industry, and for the good, in my view, because it allows you to have the benefits of the brands, which is hugely important, and yet you have the control as an owner with your own management or with a management company that's much closer to the owner, as we are with our 23 managed hotels, than, with the greatest respect to the brands, Hilton or Marriott ever will be. Because you'll be the 800th most important hotel in that system, and you'll be the top 20 in mine, and that's how it works. Even if it's the top 50, hopefully with us, it would still be a small group of hotels that we will give a lot of attention to. The reason why asset management is important, in my view, is because the industry has always, particularly in the last 20 years with the divesting of assets, been appealing to investor groups that are not hoteliers. And there's nothing wrong with that at all. All my clients are investors. I have no other clients. I don't work for anyone other than people who invest or are a stakeholder in the hotel, banks, financial institutions, and so on. They're not hoteliers. They want to be in the hotel business. They like the asset class and they make more money, a lot of money out of it, but they need support and help to be able to do it. And because of the split between the management business, management brands, and the franchise ideas, you've got this important role for hoteliers to play to help investors to get the most out of the assets. The bit that I think is wrong in asset management, and I saw it when I was at Hilton, I ran 31 hotels at Hilton in my day, and I had a number of asset managers who came into meetings, and they would sit there and scream and yell and point fingers and tell our teams that they were really bad at this or that or the other. And I very politely nodded my head, thanked them very much, pointed to the management contracts on the shelf, and then went on and did what I needed to do for the benefit of my company. That's not how you asset manage. I have learned over the years that you do not fight brands. That's not the way to get them done. They are a very important and value-adding part of our industry. And the best way, by far, to get the most out of the brand relationship is to work with them, is to be able to partner them and to get the job done between collaboration and relationship building. The important thing, however, when you're doing that is to understand what you're talking about. And the reason why M&T doesn't have any asset managers on its payroll, never did. From the moment David and I created the company, we never believed in the asset management model. What we have are 10 people who just do revenue, headed by the ex-revenue director of Marriott. And the people, there are 5 of them that just do finance and cost conversion. Head of Hilton Finance came over to do that. Property, completely focused on property. So we have specialists that go into the businesses and work with them, so that Marriott and Hilton and IHG and Accor and Hyatt and so on who work with us will sit down with real specialists at their level who can really talk their language and add value. That's how you do it. And if you talk to them about the pricing strategy of a particular hotel from an ex-revenue director of Marriott Europe, who is on the side of the owner saying, let me show you why we think this is right and can we do that together, they respond very positively in 99% of the cases. Where they won't is if I come in and scream at them. And they'll go like that, shut up shop. And we were talking earlier, weren't we, about the idea of the the contracts, the management contracts and the franchises, if they get sticky, if they get difficult, in my experience, at the point at which you start referring to lawyers, with the greatest of respect to lawyers who always have a role and will be able to formalize whatever is negotiated, I do believe that there's a stage before that, or at least simultaneously with the legal profession, which is what we do all the time. We work with loads of lawyers, but we're the ones who are saying to the brands, let's come up with a deal. Let's get the commercials right. Forget the legals, that's going to happen. And I don't want to bring them in. I want to work out a way forward. And then you bring in your leverage, you explain to them what you're trying to achieve, you come to an agreement, and the lawyers and you then work together on making it happen. And I think that that's the way it works. It's a partnership between asset management and the legal profession in terms of what's required to get the job done. If you just go down the legal aggressive route, these brands are litigious. They care greatly about their products, being the management contracts, the franchise agreements, and they will shut up shop and they'll fight you to the nth degree.
Felicity, is that your experience, or do you like to come forward out of the shadow, or do you like to be in the shadow with an axe? Or
no, I believe that your initial approach should always be a collaborative one. It should always be, working together. Although, in terms of entering into the contract in the first place, I think that is quite a difficult one, because quite often an uninitiated owner will think they're entering into more of a partnership, and I don't think it always operates like that. And I think it's really important that they understand exactly what they're entering into and exactly how things will work, and they're in some cases signing over a jewel that they've invested a lot of money in, and they will not have the control. And I agree, as a process, I think it's important to work with the brands. Of course it is. It's the way the industry will keep turning. But I think if you've got, as I said before, if you've got a bigger portfolio, you may tend to get a better deal. And I think there should be more transparency throughout. When you've got the ex-Marriott European revenue chief dealing with things, then you're right, it's easier for the brand to talk the same language. And I think if you could have that every time, that would be ideal. But I do think that for the less savvy owner, it still should be more transparent. So I think, but I totally agree in that going in aggressively, whilst you might line up where your pinch points are, going in aggressively is never going to be the best process. And I'm not one that likes to rush off and litigate, because I think I hate to say it, but the only people who win then are the lawyers, and we're not those kind of lawyers. We don't want to win that way. There are plenty of other ways to win and move on to the next matter.
And talking the next matter, I am paying attention to your Q&As. I am. So keep putting them in. In fact, I'm going to queue up Carine to answer the first one at the top. But I'm just going to go back to Tom for a minute and talk about your relationship, because you are not asset managers, but you do have much more of a kind of a hands-on approach with your owners, is my understanding.
Very hands-on, and it comes from our lifetime of experience as operators and owners. We come from the owner's perspective. And it's interesting when I listen to the dialogue about brands, I agree with everybody here, because I think, Hugh, you probably work with a lot of the top brands of the highest chain scale. But when you work in the mid-scale sector, hotel owners, the largest amount of independent hotel owners who work with brands in the mid-scale, who do, as Felicity said, think they're getting into a partnership and turnover, and then they find out that it's not like that. There's a lot of differences in how all the brands operate and how they support, which is why how we approach things is really not from a brand perspective, but from the hotel operator's perspective, who ends up being the most important person in our relationship. When we work with each hotel owner, the first thing we need to address in terms of in terms of figuring out what their potential is what is the platform and what is the set of services that's going to get you there. We have our own brands. We have independent collection, and just depending upon the asset, depending upon the market, we make a recommendation. Sometimes we'll make a recommendation. You don't need us. You can do a couple of things on your own, and you'll be fine. But I think we're kind of a hybrid, Katherine, because we end up doing a lot of the things that probably asset managers do, and a lot of the things that management companies do. We have total control over the revenue plan, the revenue strategy. We have total control. We ask the owner, what are your goals? What market? And then it's kind of turned over to us. So the only thing that we don't do is the actual hands-on management. We're not involved in HR or the controlling of the expenses that a management company would do. So it's a little bit different about what we do, Katherine. We've kind of picked from different models and cherry picked and said what works and what doesn't work for each respective owner.
Well, now is the time for a hybrid, I hear. Right, Carine, I'm going to now throw all the questions at you. So is the sector in denial over the extent to which business travel will recover? And anyone else can pile in on this after Carine, if they are so minded. Will recover post-COVID, and are we going to see a supply excess as a result? And I'm going to fling in this one as well. Are we likely to see ownership of hotels move towards the seasoned hotelier and the less experienced hotelier leave the industry because it's been so ghastly? I'm going to end that one on, seems more than likely.
First one, you can't be in denial of something we don't know. And I think that the biggest problem that we have now is to try to anticipate what business travel is going to be. I think there is an element of travel that can be replaced possibly by Zoom calls. Yeah, we've learned that actually possible to do a lot more meetings. But I do think you will have to travel and meet people in person, and certain jobs you have no option. You have to be on site, you have to go and in the location. So certain advisor job, yes, you can probably do online, but it's not the same. Just to give you an example, we working on a project on an island in the Caribbean, and obviously we can't travel there, so we've done. I know, but I mean, the team could only do it from a Zoom call and having a tour. But that, I mean, we will have to go and see properties. You can't value and advise on some of them without going there. So while there might be an adjustment in business travel, I'm quite confident most of it will come back. It might take time. It might be different. It might be longer. It might be more meaningful, even conferences, because you will have to spend quality time with teams and people. So it might be a readjustment, a reinventing of it, but I think the vast majority of it will come back. So we can't be in denial until we know exactly. And I think from as soon as we're all a bit more vaccinated, and can do the travel and are allowed to do it, we'll have a bit more idea. And until international travel is free, we have no idea how much we're going to see our, European colleagues, for instance, but we will go back to see them.
Yeah, I'm just going to pause briefly before I throw you into the next question and ask for a show of hands from the people I can see. Who is having face-to-face business meetings at the moment? Okay. And of those who aren't, when do you anticipate getting back to that? Hugh, Tom?
I think very soon. I think that businesses are starting to go back to the offices now. Hotels will open in May. I think the opening of hotels inside will begin to allow everyone to start to use them again. And the face-to-face meetings which are currently starting to happen outside, will start to happen inside in May in this country.
Tom, when's your next latte?
It's already happened, and it's happening so fast. I mean, there are so many. We've all been on hold, and it's funny how all of our calendars have looked the same for the last year. When people say,
yes, I don't even check my calendar anymore. I know
when people say, when can we have a chat on the phone? It's usually like, well, pretty much any time if there's not a Zoom call. But I see it picking up a lot, Catherine. People are looking, as Hugh pointed out, about the vaccination schedules. Certainly here, certainly in the US, and that's kind of the basic indicator that's given everybody the comfortability to move forward. So I see it happening very, very soon, right? Certainly right in line with all the government's openings.
Yeah. Sorry, Carine, I interrupted you by relentlessly polling people like a bad episode of Friends. Do you see the not amateur hoteliers, the more seasoned hoteliers starting to dominate? Has this spooked the less experienced?
Probably, depending on which, again, type of hotels you look at. I think some less seasoned, completely new to the sector people have also moved in because they have a complete change of life. And we've seen a lot of lifestyle buyers buying hotels or pubs or restaurants because they want a change of lifestyle. So we might have seen a rise on one side. Some might get spooked, but as we've said earlier, a lot of the owners that we're seeing are the experienced one. And we also have people that are interested to get hold of a position in that sector, get an operating partner on site. So as long as it's all driven also by value and returns. So I think we'll continue to see not just very experienced one for the short term, but long term, there is a place for all of them, I believe, and enough support from asset management operating platform brands to support less seasoned hoteliers to enter the sector as well.
It's okay, people, you can join hotels.
And we have, I think, Catherine, also that when it comes to the repurposing, there's a slightly different part of the real estate investment sector that is looking more than it would have done before, because they've got retail assets or other assets that whether or not they will actually take the leap, but they're looking at some degree of repurposing, whether it's a co-working or co-living or some other beds formula. They are actually looking at a wider range of potential uses than they were before.
Is co-living and co-working a real thing? Because before this, we had a lot of co-living and co-working, and people were confused about whether it was really just a big student dorm or, you know, what it was nice to have free beer on a Friday evening, but you know, you can have beer other places on a Friday evening. You didn't really need to rent space to do it. Certainly I briefly involved myself in some co-working, but only because it was a tax break. Once it stopped being that, I lost interest dramatically. Is this just a way for hotels to fill dead space, or is this a thing? Is this a thing that we're actually going to carry on doing? Are we going to see lobbies forever filled with people in co-working?
I don't think that people are going to change that much, but I have to say when one of my more experienced partners explained the co-living model to me, I thought it's just a version of service department. So you know there is a lot of
more bedrooms.
Well, I think that they're getting bigger. That's why it's getting closer to the service departments model in some respects, because I think that way insanity lay, and I think the planners are getting less keen on the very small living. And I think the last year would have shown people that a tiny space to live in is pretty mind-bending. So I do think there is a space for it, but to a certain extent, I think it's a labeling thing, and I think those seasoned in the industry will get it quickly. Will understand.
Catherine, can I just comment on that and a plea on the less experienced question? On co-living, co-working, we're seeing it as real. We have a couple of clients who are very into it, and we've worked with them on it, and they are learning the hospitality industry with their new concept and getting there very quickly. So I think it is absolutely real. On the co-working, I think one of the big strategic changes in our industry is going to come from the way offices are used. And the reason I think it relates to us is because if people don't go back to the office in the same way, and I suspect that may well be the case after a year of working out that you don't have to be in the office, and there is more flexibility and more mobility, more ability to stay at home and others, you're going to see people wanting to meet more because they're not in the office together as much. So I think the hotels will benefit from a demand that hasn't been there before to get the company employees together more, meet more, and we're a logical place to take advantage of that. So I do think co-working environments, the flexibility of it all and so on is real, and I think it will help the hotels. Just a plea on less experience. When I was at Hilton, I was chairman of the Visit England for a number of years on a non-exec role, and I met an enormous amount of people across the tourism sector, which I wouldn't have done had I just stayed within my company. And the vast majority of them were what one would describe as less experienced owner-operator, individual hoteliers. And they were wonderful, and they still are. And they are more passionate than you can imagine. I mean, you know, we all care about our businesses. These people live and breathe it day in, day out. And I know that the brokers will see these people all the time, as you mentioned earlier. So I'm convinced that they are a hugely important part of the industry. I do, however, suggest that whether or not you're in the hotel sector or any other sector of business, if you don't know what you're doing, you're going to fall over. So the less experienced actually doesn't, in my judgment, reflect the vast majority of independent hoteliers. They know exactly what they're doing. They've done it very well within their family and beyond for many years. And they're a hugely important part of our sector. The ones that will fail are not just the ones that have small hotels, but the big ones who don't know what they're doing. You know, there are examples today of big businesses, some process of which we've been involved in, where the business got it wrong, the investor got it wrong, and you know, hundreds of millions of pounds. So if you get it wrong, you get it wrong. It's not about whether or not you're a small hotelier or a big one.
We got a comment from Felicity's colleague Robert, who says on the same lines, I'm not sure it's about experienced versus non-experienced hotel investors. I think it's investors who like real estate, who see opportunity, and it's about scale. Consolidation on the capital side, as well as the management side, will continue, particularly in Asia Pacific. And he's right, so he's put that's not a question, and it's not a question, but it is a valid comment, and I'm not opposed to those. So if people want to validly comment as well in the final 10 minutes, then do knock yourselves out. We were talking, or Hugh, you mentioned briefly about refinancing, and something that we have seen deals wise in the last few months are just a lot of refinancings, and some of them on quite kind of terms, which, you know, is stacking up trouble for the future, one suspects. Carine, have you been involved in any exciting hair-raising refinancings?
Yeah, I mean, obviously we've been involved looking on the valuation side and various aspects. Yeah, most of them we can't really comment on the terms, and yeah, that's really something we can see in the press quite often currently, and give a lifeline to people, let's say, for a couple of months or years. But as you say, that's piling on the risk as well. But it's the situation for a moment.
At the end of last year, M&T launched the M&T Hotel Support Fund, which is a MES fund specifically designed to support owners who have liquidity issues currently, who were good businesses before the pandemic, will be good afterwards, but need support now in terms of getting cash into the business. We're doing it in partnership with Black Bear Capital. We have 200 million to place, and we have about 150 million of term sheets out there as we speak today. There is real demand for refinancing, but not necessarily in the way that's been done before. We take a view that if businesses were good before and will be good again, while the bank cannot do any more, and the senior lender today, the owner is reluctant to put more in. Additional capital injections such as this can help them a great deal. And whilst the cost of this money is obviously MES level, so more expensive, if you look at the blended position, given the history of gearing and the debt that's been in place up to this point, because we're not in a financial crisis, which is interesting, it's not 2008. We are going into a sensibly geared industry coming into the pandemic who have short-term liquidity problems as a result of being closed for a year. So we believe that the blended position for the next 2 to 3 years with this new money is entirely legitimate and cost effective, and will give a solution both to the bank who want to get the situation sorted, allow the owner to put money in for capital investment, for brand support, for working capital and so on, to allow them to get through this. So I think there's a real demand for helping them without them going to a point where they have problems which involve third parties.
Cool. So Hugh has 50 million. Talk to him after the webinar. We probably should discuss the planet, because it's a real thing and it's going to turn around and bite us in the ass when all this is over, let me tell you. Going back to kind of operations, has anyone seen any kind of impact of ESG and related issues on their operations now? In the run up to this, we had BlackRock and whatnot saying they weren't going to invest unless you were nice to the planet, and Greta and a boat and all that kind of thing. Is that fallen by the wayside, or are we still enjoying that? Is there any customer pressure at all?
I certainly don't see it as falling by the wayside from the point of view of the investors. A lot of the funds still have money in them that they are under an obligation to explore the ESG agenda, and don't like to get into politics, but a lot of stuff we've seen recently, if there was more governance then in all levels of operation in the country, then it would be rather better.
Oh no, they've got a big plan.
But when it comes to saving the planet, I think you know that there are expenses, but I think that's got to be built into the costs that Hugh was advising people to look at very, very carefully. But I don't think it's something you can avoid.
Mm. And conscious as I am that I now have questions stacking up, for Carine, what is the range of decrease in values you are seeing across the sector?
That's a funny one. So we did the analysis last year across the transaction we've been involved with, and we got to a number of minus 0.76%, which is very scientific, but it's about, let's say, it was between 5 and 10% last year. If you look at what we've done since the beginning of the year, interestingly, we probably around 95% to 100% of aspirational pricing. So what we're seeing is, because there is so much competition right now, actually, when you put something on the market, you can actually probably have, if you have a good asset and something obviously that people would like, you can get to your pricing when, if you read the press in the US, you've seen minus 20%, minus 30%. We haven't seen nothing really of that nature. I mean, some processes that have been ongoing, you can even achieve above the pricing guide price, which I found fascinating. So for the moment, we haven't seen a massive adjustment in pricing. We reached pretty much what we think we should get for it on a almost non-discounted pricing. But all of this adjustment in pricing might come later when you have more stock, more distress coming to the market. But up to now, I would say it's possibly even more positive than it was in 2020. It'd be fascinating to do the index at the end of the year again.
Mm.
And are those broadly pretty much financed, or is there a deal of debt? How much debt finance would there be in those deals?
I mean, most of what we've seen up to now are fairly small deals, and therefore there were very limited financing on it. But you have a number of challengers, banks, and new entries in the debt market. So they're supporting, their cost is higher. But pricing has all done really well.
It is interesting that of all the processes that are out there, I think Carine will recognize this, there is quite a lot of assets that just aren't going. They go in with a certain expectation, and the processes disappear, or the owners just stick to them, which goes back to my original point that people are not under pressure at the moment to sell in the way that you would expect. So if they don't get the prices that has just been explained, that they actually pull the process. We are valuing, and it's impossible to value unless Savills or somebody clever tells me how they do it, and they do it. But the banks aren't asking for evaluation yet. They will do, and that's when it's going to start to get interesting. But we're looking at somewhere between 10 and 15% discount on 2019 normalized values. So that's how we would look in terms of our bidding process. But whether or not they land, and we're in the process at the moment, so it's only just started, so we don't know, is a question. But I think that with the next 2 years cash build back to stabilization in 2024 or so, the allowance for that in today's market is somewhere between 10 and 15% below the ceiling at the peak of 2019. That's the way we're looking at it.
It's going to be music to a lot of people on this call's ears. Right, so I have one more question. I have to clear it. Prior to Brexit and the pandemic, and raise your hand if anyone wants to answer this. Prior to Brexit, we have to mention Brexit. I might mention Airbnb in a bit. Prior to Brexit and the pandemic, the hotel industry was very dependent on foreign workers. Many have returned to their home countries and may not return. So if the pound stays the way it is, if the industry is fully open on a sustainable basis from autumn 2021, will there be a skills shortage, and might this concentrate in particular areas? Who wants to go on that? Tom.
I think that's obviously a reality, but hotels should not. The last thing they should do is automatically go back and staff upon their 2019 levels. This is the clean break that everybody's been looking for, to say, how can I do things over again? And if you have a hotel where 80% of their reservations are coming in online, you don't need to have 3 guest service reservation agents. And there are so many things that a hotel could get up and operational with a greatly reduced staffing, and then adapt to that. Hugh uses a word in his vocabulary called multi-skilled, which I really like. It's more important than ever that a core team be brought in for each hotel that can multi-skill and be cross-functional. So I think everybody can cope with it. Definitely.
Wonderful. And seamlessly, you've taken me with not enough time to talk about Airbnb. So I only congratulate you all on this. Next time. And I'm sorry not to see Hugh's dog. This is what my dog has done to my lip balm during the duration of this, now in 4 separate parts.
I do apologize. She was doing so well until right at the end.
Of course, they love a webinar.
I think he barks on time. I think that was highly appropriate, actually, so you come to the end.
Actually, in the
very well trained.
It had nothing to do with the front door at all.
I would like to thank the guests and indeed the audience for these webinars, and Katherine, they've been fun. So I hope that people have learned as much as I have, and it's let's hope we can all meet in person at some point.
Absolutely.
Indeed. And I have to now say some final things, or it won't work. If you dialed into the webinar, please email events@wfw.com so we know you attended. You will receive a follow-up email which will include a short feedback survey. Your feedback is very important to us to ensure we're delivering events that are relevant and engaging. I like to think that one was. If you enjoyed the dog, we can build more dogs in the future, or any other pets that you may have lying around, maybe a chameleon, and we can see whether it can change to fit the changes of the hotel sector. I don't know. Anyway, it was an absolute pleasure to see you all, and thank you very much to all my panelists today.
Thank you very much.
Thank you all.
Bye.
Bye.
Bye.